Hi, my name is David Heller. I've been a financial advisor for the last 15 years, helping clients figure out ways to build their wealth, but also ways to protect it. Today, we're going to do something a little bit different. We're not going to get super technical into a specific topic. We're going to actually go back to investment fundamentals, especially as we conclude here in 2024, where we've seen 2 straight years of 20+% returns in the market. So I want to take this moment as we sit here today in December of 2024 as a reminder moving forward and look at a powerful visual for investors as we enter into 2025. And that's the Asset Class Performance Quilt, also known as the quilt. So this is the quilt. And before I go any further, let me just notate a few things. This chart is as of 10/31/2024. I'm sitting here in December 2024, just so you have a frame of reference. And this information and visual is provided by our good friends at YCharts, which is our main research partner. They're the ones who provide us with a lot of the tools so that we can do our due diligence when constructing portfolios and making investment decisions for our clients. Now, let's break down how you actually read this chart. So, on the right hand side, you'll see the different asset classes that are represented here in the quilt. So, you'll see US real estate, US growth stocks, commodities, US small cap, and so on down the list. Now, here you'll see how the chart is broken out. So, each column breaks down a specific period of time or even year. So, across the top, you'll see it broken out in terms of 10-year returns, 5-year returns, 3-year, 1-year, 6-month, 3-month, 1-month, and year to date. And each color corresponds to a specific asset class. So by following the colors across the years, you can see how each asset class has performed. So why should this chart matter to you? Well, the key takeaway is that the top performing asset class in one year may not be the top performing asset class in the next. It highlights how unpredictable market performance can actually be. And that's why diversification across different asset classes is so important. It helps spread out your risk. You'll also notice that volatility, depending on the asset class, can vary quite a bit. Commodities is one of those that I've historically always seen that will really jump up and down. So over the last month, it's been the best returning asset class, but over a 6-month period, it's been the worst. So that's an example of how to actually look at this. Now, I will say a lot of people will look at this and say, oh, well, I can just invest in the S&P 500 and US growth stocks. Look how great they've been over this period of time. Well, what I can tell you is that in years like 2022, when the S&P and US growth were down 20+%, and at that particular moment in time, most people weren't necessarily thinking that you would get a turnaround where you would see something like this. But what this also can show you is how certain asset classes, while might not be the best performing, they do provide stability. US value, as you can see, is one of them. So how do you apply this to your own investments? First, just use it as a reminder to diversify and to stay diversified. If you see your portfolio is heavily weighted into a specific asset class, this chart shows you the potential risk of having an asset class that underperforms, and you just never know when that's going to be. Second, don't chase last year's top performer. Instead, focus on a long-term strategy that balances growth and risk that aligns with your particular investment goals. So that concludes our video on how to view and understand the quilt. Remember the key takeaways and hopefully the lessons that you have learned here and will also learn moving forward and also serve as a reminder is to stay diversified and focus on your long-term plan, not necessarily the year-to-year performance. Because I see it time and time again where I get portfolios from clients and everything they own is S&P and large growth. And I'm not saying that's bad, but you're leaving yourself open for risk. It also doesn't mean that what happened in the past is going to happen moving forward. If you're ready to take your financial planning to the next level with a customized approach, feel free to reach out to us. This way we can help determine if we can even help you or even point you in the right direction. The best way to reach out to us is through our website at sandersmith.com. Thanks for watching. For more valuable tips on financial planning, check out those videos here. And if you found this information helpful, please like and subscribe so you don't miss any future content.